I'm going to be covering things like M's and W's, why they happen, market manipulation, okay, and something called, well, it ties in with M and W's, and M and W's you can utilize with any kind of strategy. It's something that you can add on as another confirmation, and I use it as, I do use it by itself purely, but I also do use it as a confirmation as well. I'm going to tell you why, the psychology behind it, why M's and W's are so powerful, and why the market makers, if you don't know who the market makers are, they are the big boys, you know, the smart money, institutional players, things like big banks, corporates, central banks. These are institutional traders, smart money, and us retail traders, dumb money. Okay, so I'm going to show you how they manipulate the market and why they do it, and then yeah, and that's it. I'm just going to get right to it. So let's get straight into it. So I'm going to show you a really good example of what I look for when it comes to price action formations and patterns, and that formation is M and W's. Now, why do M and W's happen? Well, I'll give you a quick little background. Now, the reason why M and W's happen, okay, and you can see it here, there's a bottom here, there's a high here, you can see it right there, but the reason why they happen is, think about it like this, right? Let me just get my drawing tool out. Where is the brush? Oh, yeah, there it is. All right, so first things first, yeah, we're going to have an uptrend, a pullback, an impulse, a pullback, and then an impulse, yeah, 5-wave. Now, what happens, right, when retail traders, majority of retail traders are either going to buy the retest here and then go, thinking that it will keep going, and they might even do another, you know, support and resistance line here. Now, some retail traders, the ones that didn't get on down here, if there was, you know, some previous resistance, now support, say they got in here, right? This is a good area. Now, if once they get on here and they don't take their profits up here, say they're, you know, majority of the emotions come into play, and greed comes into the equation, even though they try to, you know, abide by their trading plan and their trading rules. Majority of retail traders don't, because, you know, 95% of the retail, majority of the players in the market are losing. Why? It's because of their psychology, it's because of their mindset. Now, let's say they get in here, right, and they catch a nice little move. It comes and pulls back, okay? But what happens is that, let's say the market makers realize that there were buyers that came in here, there were some buyers that came in here, and they know, right, they know that if they push it up a little bit more, because what happens is that the retail traders are buying, but the institutional players, okay, the big money, they're selling, right? So this is what happens when we enter the market, right, through our broker. We're not getting tied with, you know, Joe in America or Yan in China. It doesn't work like that. They are buying against our position, or they're going against our position, okay, the brokers and the retail traders. Now, the brokers go to the liquidity provider, okay? So it goes us, brokers, liquidity provider. They're called the market makers, right? They're the ones that set the price. They're the ones that set the spread. They're the ones that can manipulate the market. That's why you see at high news release, you know, when the news is about to release, you see a massive, like, you know, manipulation and spread. That's the dealer. They're the market makers, like, doing their thing. They're collecting. They're putting the spread really, really high, right, really wide, catching traders out that have put their stops too tight to the current price, wherever that be. And then if people want to get into that because a lot of retail traders want to get in just before the news release so they can catch the big move, right? Greed, FOMO, and wanting to be right, okay? So they jump in at such a bad price, okay, because the spread has been manipulated by the market makers because they know this, right? They know this. Now, what I'll do, right, one live session, I'm going to show you guys that in action. I'm going to show you that in real life, and I'm going to trade. I'm going to actually take the right end of that trade, and I'll show you how I do it and why I do it. This will tie into that, okay? M's and W's at the peak high, peak low formation. But I'm going to show you guys a live example of manipulation of spread, and we will you guys will go on my command when we enter the trade, and we'll get into profit and take that 30, 40, 50 pips in 1 minute, a 10-second candle or a 1 minute candle, okay? And I'll show you how we'll do that as a live session. But anyway, let's get back to the example. So let's say you get the retail traders, coming in here, FOMO, greed. They get a bit of a pullback. Some might get in here. Some other smart retail traders get in here. But what happens is the institutional the market makers realize that they have to reverse the trend, okay? And how they're going to do that, you might see this slow moving trend. But what happens, right? This is the high of the week, okay? Let's say this is the high of the week, and you can see it here, okay? You can see the low of the week here, low of the week here, all right? And I'm gonna go over the M's and W's right here at these peak high formations. They have to be at peak high formations. M's and W's have to be printed, or you cannot enter an M and W when it's at the Monday or Friday. It's just really, really stupid, okay? You don't want to do that. Now, what happens here, okay? So you get, we get the impulse, pullback, impulse, pullback, impulse, pullback. Retail traders are getting here going, yay, it's going to keep going. And then you get the breakout traders here. The breakout traders, okay, the ones that, trade breakouts, right? Now, this is obviously really basic. This is obviously really basic, strategies, but you're going to get a lot of breakout traders here. They're going to put their buy stops here. You're going to get, buy stops there as well, so forth and so on, okay? Now, look, let's say this is where the market, okay, the market makers go, okay, you know what? Then they know now there's a lot of contracts to the buy side. They know there's a lot of buyers now. A lot of retail traders are jumping in. You get the breakouts here. Now this is where you're going to get this is the first leg of the M, X to A to B, B to C, okay? And the great thing about this is what happens, right? You get all the market makers know that there are a lot of contracts, okay? There are a lot of buy stops. There are a lot of even potential stop losses as well. There's a lot of liquidity up here, okay? A lot of easy pickings for the market makers, all right? The market makers know, because they just know how retail traders think. So up here, all around here, right? There's a lot of liquidity, a lot of money, all right? Millions and millions of dollars, okay? So what happens is this. They're going to reverse the trend, and they're going to reverse it so friggin' hard that you'll see it might have taken so long for this to happen. And then when I show the example here, it just moves really aggressively away from the low or the high, okay? Now, X to A to B, B to C, right? And this is where I enter. C to D, bang. And then you get that, comes down, boom. And it's a really aggressive candle. And this is so obvious. Once you understand their formation, how they their objective, how the market makers move the trend, it's really, really easy. After that, you can never not see it again. After I show you this, you can never not see it again. Now, there's an easy way to identify the low of the week and the high of the week. You've got to count your levels, okay? The market moves in threes. It's always going to move in 3 zones, okay? Which subsequently we've learned, okay, through IML Academy, we've learned that with Elliott wave, 5-wave up, if you think about it, right, what is in between those waves, right? Let's have a look. When you have your 5-wave up, okay, you got 1 zone, you got 2 zone, okay, you got 3, right? So you're always going to have the market always moves in 3s. It's the universal number. It coincides with phi or phi, the perfect number, which is 1.618. Okay, hence why 61.8 is a very, very powerful retracement number and a very, very powerful Fibonacci ratio because of its connection with the universal geometry, market geometry, all that kind of stuff. Okay, all that good stuff. But let's get back to the levels, right? So what I do, okay, I count levels, and the way I do that is by identifying this. I identify the WVVM and MAAW. Okay, and I'm going to show you that right now. So this is what I look for. I look for this. So there's your W. Right? Up here, whatever. And then WVVM. All right. So then I've got a V. I've got another V. And then I've got an M. All right. And then I've got A. And then I've got an A here. And then I've got a W. Now, I don't mark this any more higher than the 1 hour chart. I don't go anywhere above the 1 hour chart when I'm looking for, when I'm counting my levels, when I'm identifying M's and W's, okay, or M's, WVVM and MAAW. So basically what this means, okay, and I'm just gonna delete all this stuff. Now, this is how I knew that this up here, I was going to sell this. When I identified the low, okay, now I'm going to bring up now this is a really, really easy way. This is a really, really easy way to identify, because most people go, Tyson, how can I find the high of the week or the low of the week? How can I find, really, really good entries? How can I find good exit points? All these kind of, common questions. Now, this is going to solve it, because once you can see this and once you can count the levels and how the market moves in 3s, if the market goes in 3s, right? And I'll show you here, but I'll show you another example later on. But when, say, the market, does that, WVVM, and then it keeps going. The reason why it keeps going, okay, is that the market makers are not satisfied with the accumulation of contracts to reverse the trend. They don't have enough liquidity, okay? They don't have enough value for them. They don't have enough incentive to reverse it and to catch out the traders, okay? They just don't. They need a reason. This is a business to them. This is why it really, really gets to me when most people don't have a trading plan, or they don't take this seriously, or they don't treat this like a business. You are against the most advanced robots, AI, and hedge funds, big banks that have millions, billions of dollars, okay? And you think you can just come into this market and just go, yeah, I'm going to buy here and sell here, and not, you know, not track my trades, and not track my performance, and not take it seriously and ask the right questions. Gee, where do you, like, you might as well just go to the casino, go get all your money, right, that you're going to put in your trading account, go to the roulette table and go, yeah, can I just put all my trading account onto, actually not black or red, let's put it on 1/3 of a section. So you got 1 out of 3 chance. Actually, you got 33%, 33.3333% chance of winning, not 50%, 33, like a third. Okay, that's what you're doing, and it just gets to me, and I just had to, you know, get that off my chest, because you guys shouldn't be doing that. It's really, really shooting yourself in the foot. Anyway, all right, so let me just get my time scale session breaks. Beautiful. Okay, so we've got, today is Wednesday, all right? So we've got Wednesday, Tuesday, Monday, Friday, Thursday, Wednesday. Beautiful. Okay. So, wait, Wednesday, Tuesday, Monday, Friday, Thursday, Wednesday. Okay, Tuesday. So let's type this in. Tuesday. Oh my God. That's one. Come on, buddy. So many texts. All right, here we go. There, Wednesday, Thursday, Friday. Tuesday. All right. Wednesday. Thursday. Now, I did mention that usually the midweek reversal, where you get the peak high, peak low formation, will always generally be around the Wednesday. But doesn't mean it's always going to be around the Wednesday, because think about it, right? Market makers, even though that's generally when they reverse the trend, they know that they have to keep us on our toes, and they're not always going to abide by the rules. Okay, they don't have to. Okay, they have so much more money than us that they can do whatever the fuck they want. All right, money rules the world, and especially rules the world when it comes to forex, as we all know. Okay, so I'm going to tell you why AUD right here, and this happens across the board, any pair, any 1 hour to 15 minute. That's the main ones I use, because it's easy to identify, you know, midweek reversals, the levels, M's and W's, MVV, or, you know, all of it. Okay, so let's do it. Let's break it down. So we've got, where is my box? Oh, beautiful. There, that's level 1. That's level 1. level 2. We've got extended stop hunt, mid-route reversal up here. You got zone 1, little tiny zone, but it's a pullback. So for zones, so level 1, level 2, and then level 3. All right. Level 1. That's level 1 as well. Level 2. Level 3. Level 4, actually. Level 4 extended stop hunt zone. Three. 2. All right, cool. So what we have here, remember, we've got W, V, V, M, A, all right, beautiful. So what do we have? Now, the reason why I took this straight down here, I counted the levels. I knew where I was in the market maker trend. I knew where I was. I knew where it's clear. This is what I've learned. This is across the board. It is so obvious that once you, like I said, once you understand it, I want you to study this, study. You can't unsee this. And it empowers you so much because you realize how easy Forex really is. Once you understand what they do, then it's literally game over. Okay? So look, first you got WVVM, okay, level 1, level 2, level 3. They weren't happy. They didn't want to reverse, even though this could have been somewhat of a M right here. They weren't happy with the contracts. That's why generally, and see, it's Thursday, Friday. Thursday, Friday is not usually a reversal day. So extended stop hunt. They did a multi-day. Now this is very, very important. Multi-day W and Vs. So if you get a multi-day M formation and a multi-day V formation, this is a very, very powerful confirmation. Okay, that the market can retrend, that the market can correct. Okay, so we've got, this is when I could see this happening. Okay, when I saw this happening, I knew just to count the levels down. I knew that to count my levels to the downside so that I could find that reversal and I could find my entry down here. Okay, now here we go. So we got extended, they move it, they shift the zone, they shifted really hard. You can see how slowly this was and how quickly they moved it. Okay, this took like 1, 2, 3, and then 1, 2 days. It took in comparison to a 3-day build-up of movement or price action to reverse the trend and catch all these buyers here who had their stops underneath here, maybe here, wherever it is, and they got caught out. Okay. If they didn't take their profit up here because they're greedy and they think the market's going to continue to the upside when it doesn't. Okay, so what do we have next? So we've got Monday level 1. You can see here very, very messy. I mean, look at that, really consolidation. This is in the Asian session. Asian session generally is always going to be very, very weak. It's going to be very rangy. The market, doesn't move anywhere between 20 to 50 pips. Depending on the pair. And then it comes down, it makes a second level. So the way you count levels, right, is when you get some form of a retracement, okay? So, it doesn't have to be perfect, but at least if you can find when the market moves, retraces, that can be a level. Moves, retraces, that can be a level here, okay? So even though I built it here, that's just my trained eye, I can see that, okay? So I took that here. Let's go back here, right? So we come down, pull back, level 1, come down, pull back, new zone, level 2, and then come down, pull back into our third level zone. So once I identified this structure, this formation, then I knew I'm waiting for MAAW, and I'm looking for the entry down here, and I'm going to go on the 15-minute to get my entry, okay? Take my profits here. Give me 1 second, guys. Got to secure the bag, All right, cool, done. Closed all my positions. Beautiful. All right, so we have my formation here. Brilliant. I've identified that we've got an MAAW, and now I'm looking for my entries. You can see here, beautiful multi-day. This was Tuesday, and Wednesday's usually, the reversal zone. That's when we get our reversals and beautiful bang. It came down. We had that pin here. Now, what I look for an entry, okay, what I look for, once I see this formation happening, once I see that multi-day, so X to A to B, B to C, once I see B to C leg, okay, I'm looking for pins to the low. So this perfect candle right here, this right here, once this candle finishes, I enter right here and I place my stops because I know it's a very high probable scenario, anywhere between 90 and 95% correct. So there's my stop. So my stop will be from entry for about, usually it's about 10 to 13 pips is my stop. And then I literally bang all the way up, either 40 pips. You can take it at the previous, so you look at structure, you can see here, you can take it here. This is a very safe place because that's previous high. So it's a good 20 pips. So it's still pips in the bag, but you can get like, the yens, they move very, very quickly. They're very volatile. So I only recommend that for people that have had 6 months or more live trading. Okay. But usually start on AU, EU, which is a very, very easy to read. They're much more slower, much more easier to understand, not as, erratic as, not as erratic as the yen pairs and the pound pairs and things like that. The Swissy is a slow moving pair. And yeah, the euro is a slow moving pair and the well, AU, EU are they're the most traded currency pairs, and they just move very, very slowly. So really, really good for beginners. All right, so I enter down there, take profit 1. You can twin trade it. You can enter two positions of your max lot, and take that up here. Take your first position there. Put your stop loss into stop profit here. So you got a risk-free trade, and yeah, let that other one ride. And that one should continue moving to, moving with the trend, because the market makers are now shifted the zone. They've found the low of the week. That's the high of the week. That's the low of the week. Usually the low of the week is going to be around Monday, the Wednesday and the Thursday. Wednesday our day, but generally Wednesday. But it's not always that day. Remember, don't always think it's going to be on the Wednesday. You got to be flexible. You got to really keep your mental flexibility and understand that they can move and they shift it whenever they want. It doesn't have to be on the Wednesday. It could be on the Friday or the Monday, as you can see here. WVVM, and they had a multi-day. A multi-day M is way more powerful than just a single an intraday M. Okay, what I mean by that is, it's say this is one day, right? That M and W at the low of the week and the high of the week. So sorry, the W at the low of the week is good. You got to make sure you can identify that as well. But you got to make sure you can identify that zone. Okay, you got to make sure you can identify level 3 or level 4 extended stop hunt zone. But when you get these multi-day, how long it took, these are 15-minute candles. This is a lot of action. This is a lot of consolidation. Bang, bang. Once you see that, X to A to B, and then B to C happening at the high of the week and the low of the week, man, it's on. It's on Donkey Kong, because they wouldn't. It just to be in this kind of formation, right? To build this kind of price action takes a lot of money. It's not, and what's going on here psychologically, right? Like I'll draw it out, right? Psychologically, what's going on here? Okay, because you got sellers here. They're coming in. Retail traders are like, yay, I'm going to sell here. I'm going to sell here, right? Breakout traders are selling here. Breakout traders are selling here. Okay, so what happens? They're coming in. Then they get hit by consolidation. So you get sellers here, people are getting here. Trust me, they do. That's why people lose, right? They're like, yay, I want to get out. I don't want to lose out. FOMO. Bang, it reverses. It hits their stop. They're like, oh my God, no, what's going on? And then they buy. Oh my God, the market's reversing. It's reversing. And then the market makers are like, oh, no, it isn't. And they take them out. They take out their stops. They come down. They hit all the buy stops here. All the stop losses that the people that have bought, because they thought that the sell's already over. Then they sell it again, and the retail traders like, yay, it's a sell again. See, I told you guys that the Aussie dollar is going to weaken. It's going to weaken. Look at that. Wow, look at that. Now they got to really. Now retail traders are thinking, oh my God, I'm right. See, I told you. I'm going to put 10% of my risk, my account, and I've been catching it from down here. It's going to break it down. It's going to break this zone here. I'm going to get on right here, bang, 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 bang. Okay? I love it when I see these candles. This is what I call a retail trader, a fuck you retail trader candle, right? Or a vector candle. Because what's happening psychologically, they've caught it up here. They're catching it down. They're like, yay, I'm a genius. This is going to break again. I'm making a killing, right? And then bang, it reverses, boom, 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 boom. And now it breaks. So think about the play, what's going on here psychologically, right? It's fucking with the emotions of the retail traders. They're getting in, they're getting out, they're getting in, and then they're just so overwhelmed by what's happened that they start making more rash decisions. And that's the objective of the market maker. All right, guys, so that's it from me. We're